Hey guys, so I took this trade on GBP USD today, and some of you guys caught it too, so I'm just going to break it down for you guys. So, looking at GU on the 4-hour, and you can see I shared this in the server as well. What we were looking for was that we want to see a reaction from the demand pushing up into the supply since the overall swing trend is bearish. So after we reach the supply, that's when we can look for shorts to take out this overall low. So why am I still looking for longs even though the swing structure is bearish? I'll show you on the charts here. So as you know, we have two key trading opportunities. You either want to trade with the trend, so the swing trend is bearish, so trading with the trend would be from this supply. However, we can take trades in the opposite direction once we have confirmed retracement. Now, in this case, price dropped so impulsively that the retracement would be when we reach this level, which is quite a far way away, right? But until this level is reached, there's very low chance for price to be able to break this low because we're not in any supply and the retracement hasn't been fulfilled yet for the trend move to continue. So we had the break of structure, which is the trend movement, and now you need to have a retracement before you get the next break for the next trend movement, right? That's just based on the high probability trend phases. Those steps need to be fulfilled in order for price to do certain things such as break structure. So since we had the last thing we had in the cycle was the break of structure, we want to see the retracement phase get fulfilled. And in order for that to happen, we need to see price reach this level over here. So what I was expecting this morning, and let me just put it in replay. What I was expecting this morning was to enter that demand, which will take us to that retracement level. Now, above the retracement is, of course, liquidity because we're so close to this supply. So that's where we will look for the shorts that will take us into taking out these lows and continuing the overall swing trend. So that is our higher time frame bias. Now, if I go in the 15-minute, this is where we take our actual entries. So what we can see is that this is our swing low, this is the swing high we had to the break of the previous high over here. Now that's important because we obviously have the 50% of the swing reach. Why do we have this? Because we broke minor structure over here on the 15-minute, which means the 15-minute retracement has begun. So you can see that we are pretty much heading into taking out the liquidity that is like forming over here. But I don't really care about that. I just want to reach the 50% and then I look at what demand zones are below the 50%. So we actually had 3 demand zones. Obviously this is just, previous demand over here got filled and then we move on to the next unmitigated demand. I actually didn't see the lowest one until I was looking at it right now this evening. But essentially the reason why I was more focused on this one is because you can see we had that move up, move down, and then the impulsive move up. The impulsive move up is basically between these 2 candles here. So the last down move, if I really make it clear for you, goes up and down, up. So this is the last down move before that impulsive demand. So that's why I was more focused on this minus 69 demand. But yeah, this is like the more extreme one, but both are perfectly valid. And then you have this one higher up as well, which is also valid. So when I have multiple demands like this, what I notice is it doesn't matter which one of these you choose, you won't get a valid entry if the zone isn't strong enough. So it doesn't matter if you're looking at all 3, you won't get a entry, you won't get the delta shift and the rejection from the demand if it's not strong enough. So you can still draw them all, but yeah, you just let the reaction decide if you take the trade or not. So I'll just go back, and you can see this was the minus 69 demand, this is minus 93, and then over here is the minus 85. So if I just go back, you can see this was the reaction to the minus 85, and you can see that when price reached that, we had negative delta, so no valid entry. On the next candle, it just breaks straight through that, so no entry there. So you would delete that one, delete this here, there's nothing. Then you can see here why it doesn't really matter which one of these you chose, because you pretty much have the same reaction on both of those levels. And yeah, you can see, so we went from negative to positive, and then you're getting the rejection on the key level as well. So I took my entry on the 345 candle. So we had the delta shift and the entry here. And to be honest, I mean, these are just confluences. It's not part of the entry criteria, but you can see there's a lot of bullish delta in the candle, which is just a nice sign. But yeah, it doesn't matter. As long as we have the positive delta up here, we can enter. So I entered at the close of this 345 candle. So let me just skip to that. I believe that is over here. So I enter right when it closes. And for my stop loss, I would put it here. So I normally put it at the last internal low below the demand zones. So that is this one, but this was also very close, and if you want to be safer, you can take that. It just obviously affects your risk to reward, but in this case I did take the lower one, and it still played out for me luckily. So 1 to 3, and then unfortunately this is a bit scary when this happens, but the break-even level, so you're looking at the structure on the left, the last minor high is up here. So basically there is no valid level for us to break even in this trade. So I'll show you what I did to manage this trade. So yeah, it was quite a volatile trade. We went up quite a lot. We went up, almost 2%. And then price reversed all the way back to break even. Then we had that candle, and then this is actually when I set a break even level. So how I read price when I'm in a trade is, this is the move up, right? These 3 candles going up, then this failed to close above that. You can see this is like more fractal structure. So this is essentially the last high, and then I see this as the low move, because this candle is going lower than the previous one, right? I don't want to confuse you too much, but essentially this is the last, this is, high, this is the new low for me, and then therefore if price goes above this, then that for me is my new break-even level. So if I go forward, price tapped that level. So that's when I moved my trade to break even. Now it's up to you if you want to put it exactly at break even, or you can just put it below the low over here. But yeah, it pretty much went straight to TP, so you don't have to worry about that too much. But yeah, that's the trade breakdown. Let me know if it was clear enough for you, or if you have any more questions, and I'll see you in the next one.